Is this
Yes.
audible now? Yeah, fine. See,
Yes.
Yes,
Yes,
sir.
just
sir.
know that what.
Audible.
Yes, sir.
Yeah, fine. Thank you. Thank you.
Yes, sir.
Yeah. Okay. Okay. Fine. Okay. Fine. See, what is management accounting? Management accounting. What manager managing that all the that all the recording and all the transactions. See why we want to study about that. The management wants to take the crucial decision making. How they are taking the decision with the proper informations, proper previous data or previous records. Previous record will supporting to take the proper decision for that future. See, management, why they want to take with for supporting to that employees and the shareholders, other monetary benefits. Okay, so this is basic things you studied in your earlier. What is the management functions? Planning, organizing, directing, and coordinating and controlling. This is a common management functions you studied in your earlier. Theoretical part you can go through it. Maximum, your non-semester pattern definitely 20 mark and 8 mark question will come. Okay, so theoretical part, what different types of objectives. Explain the various objectives of management functions and explain the functions of management accounting or difference between management accounting and cost accounting or financial accounting, whatever it may be. If to theoretical part is too much of there, so our first unit, first portion of management accounting, financial statement analysis. So what is financial statement analysis? The statements means already we have the documents. We have the documents. One thing, if you want to know the performance, you can check it that profit and loss account, and the position of the business. From the balance sheet itself, whether the that capital reserves, other for creditors, bills payables, whatever it may be. If the management that minimizing that unnecessary things, if asset will be going higher, you are favorable. If liability will going higher, unfavorable natures. So here the management analyzes how they are to analyze. There are three things. One thing, income, that means comparative income statement and comparative balance sheet, and a common size income statement and common size balance sheet, and trend analysis. There are three things which helps to the management to taking the proper decisions. Okay, so here financial statement analysis, we are four problems is there. So first comparative income statement, you can note it down, because I'm not putting any theoretical part. Because you have the theoretical part in your own. You have text booklet, you go through it. Little bit some information, some key note I will tell you. You can note it down. Okay. So financial statement analysis classify three things. Number one, comparative, and the comparative statement also classify, subclassify two things. One is income statement and balance sheet. And again go for that next financial statement analysis, common size statement. Again you can divide it two things, income statement and also common income statement, common balance sheet. And finally trend analysis. Trend analysis only one things, the profit and loss account will be compared from one year to another year. Okay, the three things is there for analyzing the financial statements. So one thing, comparative income statement. So note it down, take down part. Comparative income statement, comparative income statement, to analyze the profit and loss account. To analyze the profit and loss account. Okay, so how you are going to analyze this? Number one, step number one, comparative income statement analyzes, that horizontal way. That horizontal means, for example, previous year, previous year comparing to current year. For look at that problem number one, 2009 is there, 2010 is there. 2009 is the previous year and 2010 is the current year. So why we want to compare? See, why we want to compare? The management want to take the decision. See, if you people are employers, if you are the entrepreneur, whatever it may be, you are going to increasing your productivity. If you are going to open various branches, how you are getting, if you know that getting for, what is your turnover, previous turnover and the current turnovers, you have to compare. Definitely we capture the market, we surviving that marketplace. Definitely we will be a little bit improvement, little bit expansion of your business or a diversify of business. So these will be studied in that which statement, no, comparative income statement. So comparative income statement or comparative balance sheet, you can calculate it only horizontal, that means row wise, not for column wise. Row wise, horizontal, from previous year to current year. The difference will know, the difference will come, no, the difference amount. You can take the formula also. Because why no? Why we want study about? See, here all the managements they want to only the result will be expressed in that percentages. Mute panna, slow panna. Expressed in that percentages. So how do you calculate a percentage? So percentage equal to percent, comparative income statement percentage equal to. So this is the formula you can use. The difference value of current year and the previous year divided previous year 100. What you get? So for comparing to previous year and current year, for look at that problem number one, no, 10,000, sorry, 12,000, sorry, 12, 10 lakh, 12 lakh. So the 2 lakh will increase for that current year. The sales volume increase 2 lakh. So the managements want not quantitative, they want to express in percentage. If you are working, no, your hike will be some percentage, 3%, 4%, depend upon your performance, depend upon your, that contribution of your business. Okay. So same thing will be applicable in that financial statement analysis. What no? We want to, the management, how much of the percentage increase from last year to current year, how much of the unit we are going to increase in that next year. That's why they want to calculate it, compare study. Okay. So 2 lakh divided 10 lakh into 100, you get some percentage, 20%, whatever it be. So sales volume previous year and current year, 20% of the sales volume increased by that management. So the next year they will be designed, it will be. And one thing, they have to compare for no profit, net profit. So why they have to compare from no? Compare for, if your sales volume increase, but net profit will decrease. The company whether they have favorable, no. Definitely sales volume going higher, but net profit will come down, no. So as a management, they have to analyze all the areas. So where our investment will be low, where our investment will be locked, or some expenses will be going higher, for unnecessarily some expenses will be going higher. So the management wants to know each and every step of the business. So why they have to take the each and every step, so they have to minimize the unnecessary expenses, unnecessary expenditure. Okay, just wait. Yeah. Okay. This is that the comparative income statement. If you have textbooklet, you can go through it. That financial statement analysis having that three things. Number one, comparative having two things: income statement and balance sheet. Your income statement, P&L account, which shows the performance, and that balance sheet showing that position of the business, whether that asset value increased or liability value increased. We know that position. Why we want to study about, no, we want to explain, we want to answer to whom, no, to the investors, the shareholders. So that's why we want to calculated all those things. The another analysis and interpretation, ratio analysis, fund flow statement, cash flow statement, budgeting, capital budgeting. These also part of the another financial analysis and interpreted, but we will discuss this later. So this is a first one. We want to discuss one thing, financial statement analysis. Theoretical part. Just I will tell about that only few things. What is what? You can note it down. So here, comparative income statement. How do you calculate it? Comparative income statement. Compare from the uh, previous year and current year. The difference will be considered. You don't put any you don't put any minus or plus. See, if sorry, if you know that current year will be going higher, you put plus. If previous year having huge amount, you put minus. I will show it that no answer solution ppt, then we will discuss. Okay, so I will I will explain the problem number one, and some other hint I will be give you. You can note it down that answer. You can note that answer. You can take that keynote also, right? So look at that problem number one. If you people doesn't have that question booklet, you can download it from your that Instagram, right? All the things will be uploaded by our coordinator, sir, Ilungovan sir. You can download it and take the booklet. Booklet is must. See, look at that problem number one. Prepare of comparative income statements. So the things will be there, but how you can identify? No, the in question itself they can raise the some comparative income statement. They have to mention it. Okay, the following are the income statement of Abhishnavi Limited for the year ended. The 31st 2009 and 2010. The 2 years data is there. You are requiring to prepare the comparative income statements. See, one thing, it's like a 8 mark questions. Only it comes 8 mark questions. All the information will be provided in the questions. All the information. One thing, we must know the steps. How to be calculated. How do you calculate it, and how do you express your answers. Okay, so look at that. Net sales, cost of goods sold, operating expenses is there, administration, selling expenses there, and non-operating expenses, interest, income tax, etc. Okay, so you want to compare the income statement. Compare means we want to compare the both current year and previous year. We want to express our answer to the whom, no, to the management or to the shareholders. So why we want know whether the company having exactly what are the positions, whether that efficiently they have do their work, or inefficiency, or in lock something, or hiding something, whatever it may be. The management can to know the to know that the proper thing from that proper recorded document. Okay, this is the question. I will put that answer PPT. See, can you see this image? Everybody, can you see this image?
Yes, sir.
Yeah.
Yes, sir.
Okay, thank you. Okay, thank you.
Yes, sir.
Wonderful. See, this is a
No,
problem.
sir.
Yeah, this is a problem. Only 8 mark will come. It's not a 20 mark, but 20 mark, both
Financial
income
statement.
and balance sheet will come. Okay. Look at that problem number one. You can take the questions also. So you can write that comparative income statement for the year ended 31st. 31st. Maybe year ending. Old days they can use 31st December, but nowadays, as for 2013 amendment and Companies Act, 31st 3 will be whatever it may be given in the question, you should follow comparative income statement. If you want, write the name of the person. or the name of the company, you can write it. Name of the company, and comparative income statement. That for the year ended 31st December or 31st March, from that what 2009 and 2010. Otherwise, that calculated comparative income statement, it's enough. Okay, if you want to write neatly, you can write, otherwise it's enough. So the step number one, how many columns do you need? One, two, three, four, five. Four columns, five columns we needed. Take note it down. Five columns. Number one, particulars. Particulars as it is given in the question. You don't take anything from other, no, you don't manipulate it, you don't do anything your own. Okay, as it is given in the questions. So particulars, and previous year 2009 rupees, and the current year 2010 rupees. You can mention that, because you get sometimes you get a doubt, no. So previous year or base year, base year 2009, current year 2010. It's just like the statistics, index number, right? And amount, given the amount and express in the percentage. Our result will be expressed in the percentage. So percentage will be there. Okay. So number five columns you can create. One, particulars, previous year or base year, and current year, amount, percentage. Okay. And as usual, you go back the question. You go back the question. No. So question itself, first you have to start from the net profit. Sorry, net sales. So given in the question, net sales, as usual, as per the question, 10 lakh rupees is there, 12 lakh rupees. So here the amount, what is the difference? I already told, only you have to compare horizontal way, not for vertical way. Comparative income statement only row wise. First row wise. After something, add less will be vertical. Okay, here 10 lakh rupees is the amount and 12 lakh rupees is the amount. 10 lakh previous year and 12 lakh current year. So the business, the management take the decision, no, how much percentage they have increased the previous year and current year. See, the difference amount is 2 lakh, 12 lakh. You don't think about, 12 lakh is the huger amount, 10 lakh is the, lesser amount, we put minus. No, not like that. We are improving, gradually raise that sales value. 2 lakh, you can put it plus 2 lakh, plus 2 lakh. And how do you express the percentage? Within the bracket you can note it down. Difference amount, that means 2 lakh divided base year, previous year 2009, 10 lakh into 100, you get 20 percentage. Once again I tell you, because sometimes you did mistake in your examination point of view. No, you can note it down. One time you can note it down. The formula is not given in the any books. We have to create. Okay, for our convenient, our own convenient, our own simplification. We want to create that formula. This formula will help you in your exam point of view. Okay, so difference amount, 2 lakh divided base year, that means previous year 10 lakh, into 100, you express the percentage. So for comparing 2009 and 10, the company, how much they have, 20 percentage sales volume increase. So definitely 20 percentage sales volume increase. I know some cost of expenses is also there for purchasing raw material, paying direct expenses. So after you can subtract it, how much amount you, how much percentage you have the gross profit. Okay. Next you go back, net profit, net sales minus cost of food sales. You see, sometimes in your question booklet, questions, purchase return. See, sometimes they have to given in the question also. So cost of goods sold equal to, what is the formula for cost of goods sold? Opening stock plus purchase minus purchase return and minus closing stock. The things will be called cost of goods sold. Okay, if people know that, no problem. Other people can note it down. Cost of goods sold equal to, this is the formula, opening stock plus purchase minus return minus closing stock. See, don't worry. Sometimes, sometimes purchase will be given. Okay, otherwise maximum maximum question itself, cost of goods sold, directly they have given the answer. If cost of goods sold is not there in the that profit trading and P&L account, some of the purchase amount mentioned in that, no, if you know that, you can put it in that working notes. Cost of goods sold equal to opening stock plus purchase minus closing stock. The difference will be taken, directly taken that amount, cost of goods sold. So in this problem, no issues. Sometimes some problem, technically they want to tough, creating tough, question will be tough, no. If you have some doubt in your examination, so now itself you can note it down, and in your exam point of view, it will more useful for you. Okay. So here 5,50,000 is the amount for previous year, and 6,05,000 is the amount for current year. The difference will be plus 55. The cost of goods sold purchase will be how much, 55,000 will be higher. So 55,000 divided 5,50,000 into 100, you get the 10%. See, if you are 20 plus 10, 30. So if you are adding or lessing, the difference will be 30. So you don't add or less. As usual, horizontal way, that means row wise only you have to do it. And again, net sales minus cost of goods sold, you get the gross profit. See, this will help you in that second unit ratio analysis also. Gross profit equal to net sales minus cost of goods sold. Okay. So 4,50,000 is the amount for 2009, and 2010 and 5,95,000. 1,45,000 is the difference amount. Okay. So again, you go for that 1,45,000. You don't 20 minus, if plus 20 plus 10, 30. You don't add it and put it, no, because net sales minus cost of goods sold. We want to 20 minus, so minus, not 20 plus 10 is 30. Don't put it 30, it's wrong answer. So if we want to analyze only horizontal way, 1,45,000 divided 4,50,000. So what you get? 32.22%. So what is your answer? 32.22%. For gross profit ratio, how much? 1 minute. So gross profit is plus 32.22 percentage. Okay. And 11. Okay. So you put gross profit A, and again you go for that operating expenses. So operating expenses, administration, selling and distribution, other office expenses, whatever it may be, if they are given separately, you have to do it separately. So most probably, administration comes under office. All office expenses, maybe salary or rent or electricity or whatever it may be, all administrative expenses, within bracket. Sometimes they have given in separately, you can calculate it separately. Some of, for example, salary to the employee, 1 lakh, 1,50,000. So difference will be calculated and put some percentage again. So here expenses only we want. Operating expenses, you underline that. Administration, selling is there. See, administration for
Hello, hello,
80,000
hello.
and 1 lakh for 2010. So how much they have to increase? No, 20%, 20,000 rupees they have spent for administrative expenses. So administrative expenses, how much percentage they have spent it? No, 25 percentage. 20 divided 80 into 100. 20,000 divided 80 into 100. So 25 percentage they have spent for administrative expenses. See, for selling that,
Hello, hello.
no need for, why they have to increase it. So the management will raise the question, why you have spent for additional 20,000. So if you have the proper reason, definitely. Sometimes you see, when I was working in auditor firm, some institution, they have shown that beverage expenses every day 50 rupees for each person, around 1,000 rupees, 2,000 rupees. See, it is not it's for monthly, 2,000 rupees, 3,000 rupees is very lesser. But the management, they have think about that annually. For example, 2,000, if 12 months, it will go around 24,000. They have, why you have for a beverage, tea, coffee, like any snacks you have spent for. If for you have to prepare in your own in the premises also. So the management think, the management thoughts, try to minimize that, because 25 percentage is the huge expenses for administrative. And selling, no, 60,000 and 20,000, but 33 percentage comparing with previous and 20,000. Why they have no, for example, increasing the sales. But you can say, for same agencies or same brokers, same sub agents, and another, if any new people can participating in business, no, definitely we will make the arrangement for refrigerator, other. Yeah, please, someone, mute. Please mute yourself.
சார் நான் இளங்க பேசுறேன்.
சார் சொல்லுங்க சார்.
சார் வந்து ஸ்டூடெண்ட் ஒருத்தவங்க சொல்லியிருக்காங்க 6,000 போட்டிருக்கு காஸ்ட் ஆஃப் குட்ஸ் சோல்டு, 6,05,000 ஆன்சர்ல போட்டிருக்குன்றாங்க. அது என்னன்னு பாருங்க.
நான் பாக்குறேன் சார்.
அதுல அவரு சேட்டிங் பண்ணார், மெசேஜ் அனுப்பிச்சாரு. அவர் அன்மியூட் பண்ணி ஆமா கேட்கல. அவரு உள்ள என்டர் ஆகிறப்ப வந்தது அதுக்குதான் 6 lakhs இதுல போட்டிருக்கு, அதுல 6,05,000 போட்டிருக்கு.
பிரிண்டிங் மிஸ்டேக்.
கரெக்ட் பண்ணுங்க. ரைட் சார், ரைட் சார்.
நம்ம டெக்ஸ்ட் புக்ஸ்ல பாத்தீங்கன்னா 6,05,000 இருக்கும். இங்க
அப்ப புக்லெட்ல 6,05,000 அதுவும் சொல்லிடுங்க. ரைட் சார். ரைட், தேங்க் யூ.
யா, யூ ப்ளீஸ் unmute yourself and ask me. I will tell you. No, don't worry. You have to interact me, no problem. So sometimes, typographical error will come. See, if you want to put 6 lakh, no issues. As per the textbooklet, 6,05,000 is the correct answer. It's a typographical error. If you follow that 6 lakh, no issues. Okay. Yeah, please. It's as per the textbook answer. Our question booklet itself, some mistakes is there. You please note it down and change it. In your examination point of view, we have taken from the various books. Okay, various authors, various different authors. We have to take the questions and give the printed. Sometimes printical error will come. Okay, so 6 lakh is the question booklet, but original amount original amount will be 6,05,000. You people can rectify. Yeah. So I'm not go back. It will take time. That's not okay. Very good. Thank you. Hereafter, I should follow the same. Is it clear, everyone? 6,05,000 put here.
Yes, sir. Yes, sir. Very good.
Yeah.
Yes,
You
sir.
please change it. As per the Reddy and Murthy and other I.M. Pandey and other authors, we are brought from the textbooklet itself. We take the all the questions from the textbooks. So here we take some typographical error. So you can rectify it. Thank you. See, 6,05,000. If you have question booklet, you can mark it 6,05,000. You change it. Other will know. Other thing will be common, right? Okay, fine. See, your selling expenses how much? 33%. Okay. Next, any other things. If you have any administrative expenses, distribution expenses, again you can, selling is there, and again distribution or packing or whatever it may be given separately. You please put it the separate column or a separate row, and as usual, same comparative analysis you have to do it and put it your answer in percentage. All operating expenses you will take total B. 80,000, 61 lakh. So don't subtract it, because we put a heading for operating expenses. Okay, all expenses will be called as total. So 80 plus 60, 1,40,000, 1,80,000. The difference will be 40,000. So totally, that spend 28.57. That means 40,000 divided 1,40,000 into 100. 28.57% they have spent for operating expenses. So what is your operating expenses? So operating expenses equal to A minus B. That is gross profit minus operating expenses. See, 3,10,000. That means 4,50,000 minus 1,40,000, 3,10,000. You please once again cross examination, cross check பண்ணுங்க. Please, because some things, practical errors or typographical error will be there. Human error is there. If you have calculator, you check it whether the answer will be correct or not. Okay. So 3,10,000 and 4,15,000. The difference will be 1,05,000. 1,05,000 divided 3,10,000. So the company having operating profit will be good. 33.87 for paying other all administrative and the other selling and distribution, packing, every expenses. But the company maintaining 33.87% for that operating. See, sometimes operating income. So profit and sale of investment or sale of assets, dividend received or the income tax refunded. Sometimes in your question paper, non-operating income also given. See, now operating profit plus add non-operating income. You can add it, mean you can get it, operating profit will become. After you can deduct the non-operating expenses, So once again, I tell you, you please note it down. See, in this problem, operating profit is enough. Operating profit, sometimes question booklet having, booklet itself, some operating profit. If you know operating profit, no, for example, profit on sale of investment or fixed assets, or a dividend received, rent received, sometimes interest received, income tax refunded. Some words they have mentioned that these will called as non-operating, because operating means business, non-operating means which is not goods, related to goods and service. Okay, so these will be added to profit. Otherwise, non-operating expenses less. Again, you can opening one more pay. That add non-operating income. So operating profit add operating expense. Sorry, operating income, whatever it may be. You can, as usual, same compare study you can follow. So operating profit plus non-operating profit, add, you can get the total profit. And again, you go back the, you can put it at D, non-operating expenses, interest, income tax, 40,000, 50, 10,000 they have pay interest to the loan or debenture, whatever it may be. 50,000, 80,000 for increasing the sales, definitely the tax will be going higher. 60% of portion will be going for that income tax. So what is the no? So total non-operating expenses will be 44%. So 90,000 add 90, 1,30,000. The difference will be 40. 40 divided 90, 44% is the non-operating expenses. Paying interest to the loan or a dividend or whatever it may be. Sorry, debenture, debenture interest. And paying tax, it's covered. Non-operating portion will be 44%. So what is your profit? No, what is your profit? No. Or 1 minute, I will back. Huh?
Hello, sir.
Yeah, yeah,
I have a doubt, sir. You told no
yeah,
that operating profit, something you told no operating profit plus non-profit. Can you see once more that?
yeah. You can take it down. Operating profit is a separate heading. Operating profit means goods and service. Like a goods and service, what you have it, you spend something, no advertisement or whatever it may be. Operating profit add non-operating income. So non-operating income. So profit plus profit, profit plus income or profit, no. So non-operating profit income, what is that? You can write it, note it down. Income from investment, profit, and it's a non-trading nature. It's an individual income, but the business purpose they can showing that credit side, because we have that huge profit in that particular year. This manipulating some things. We don't want to discuss too much of things. See here, income from investment or profit on sale of fixed assets, income tax refund, income tax refund, interest received, rent received, any received item you can add it from the non-operating income. Okay, 1 minute, I will come and tell you. 1 minute. Yeah. Okay, can you know? Yeah, you note it down. Shall
Yes,
I
sir.
move next?
Yes, sir.
Yeah, fine. Okay. Yeah, fine. Okay. So
Thank you.
non-operating profit, non-operating income, you add it. You can put whatever it may be, C or D, whatever it may be, and non-operating expenses, and separately, and non-operating profit minus non-operating expenses, you get that net profit. So here only net profit is there. C minus D, what you get that net profit. Non-profit is not profit is not there. Non-profit, so you can remove it. Net profit. This is typographical error. In your question, no, in your question booklet you have that same. After you complete that, net profit, NET, net profit. C minus D equal to net profit. So 2,20,000, 3,10,000 minus 90,000. You please note it down in that bracket. 3,10,000 minus 90, 2,20,000. Because after, if you people having only leisure times, only you can take down your note and read it. At that time you get more doubts. Okay. So again, 4,15,000, 1,30,000, 2,85,000. The difference will be 65. 65 divided 2,20,000. You into 100. The company having 29.55%. The net profit. The company having 30% of the profitability. So the company having very good. They are in good position. So that you can, if comment your own interpretation or conclusion. No, you can write it. You can write it for that various comparing for various expenses and sales volume. Gross profit will be 132.22, and for an operating non-operating will be little bit way higher, but the company having good performance. The managers have that they put their effort and putting their efficiency. Improvising their some maintaining 29.55 percentage is very tough because we pay 60% of tax. Non-operating expenses will be could not be predicted anything because if you want to expand the contingencies there, you can arranging for loan. Okay. Okay, fine. Thank you. We'll go for that next. So comparative income statement is comes 8 mark over. So how once again tell you how do you calculated comparative income statement. Number one, step number one, that you can open the how many columns, 5 columns, namely that particulars, previous year or base year, current year, and amount and percentage. So particulars as usual given in the questions, and compare, that for previous year and current year you can compare horizontal way, that is row way only, not for vertical. Okay. And you have to express, how do you calculate a percentage, the difference between current year and the previous year amount divided previous year into 100, you can express your answer in percentage. Okay. Next you go back to the problem number 2. See comparative balance sheet. the same procedure, same method we have to follow. Particulars, as usual, base year, current year, and amount and percentage, the same methods. But one thing here, the management wants to know about each and every item separately. For example, if you are taking the balance sheet side, here assets is commonly given. All the assets is there. See, the management wants to know that today, accounting standard AS3, cash flow in statement, based on the cash flow in statement, we can rearranging that asset side and the balance sheet, that separate. In 2013, before we have that Roman letter 1 to 9. 1 to 5 you have in that asset side, sorry, liability side, and 6 to 9 in the asset sides, equity, whatever it may be. So this thing will not here, they are not separately put it here. But one thing you can learn, okay, nowadays we want to separately, we want to show it. So in asset side, you can divide it fixed assets, any land and building, furniture, plant and machinery, that loose tools, whatever it may be given, that fixed assets, and again you can put it investment. If trade investment is a short term, that is current assets. If you know that trade investment or short term investment, the word is specifically mentioned in the question, you can put it in under the head of current assets itself. Okay, suppose only investment is there, no, investment is a long term. Long term, the company, if you don't know, if the company went into liquidation, insufficient of deficit is there of balance, so the company have rights to sell their securities to the other companies, and by the amount, and the amount will be used for liquidation purpose. That's called as an investment. Investing in various financial securities, it's a safety measurement taken by that company side. Okay, so investment is a long term, and you go back the current assets. Current assets, stocks, data, cash, inventories, whatever it may be. Okay, these will come under the head of current assets. Okay, and next, you go for that liability side. Liability sides, first, what is that liability side? You can use that long term funds. Long term means here only debentures or any loans. So this is the methods we want to show in the company. All the companies, they have long term debts or loans. That means 8% debenture loans will comes under the long term debts. Next, you have to putting that another head for that current liabilities. If you have that current liabilities, sundry creditors, bills payable, provision for taxation, provision for bad and doubtful debts, proposed dividend, overdraft, outstanding expenses. These are all comes under the head of the current liabilities. You can, as usual, total will be same procedure, no. And last one, that shareholder, you know that capital and reserves. You put the heading for capital and reserves. Shareholders fund, no, equity share capital, preference share capital, and if any profit and loss account, you can add it. So now retained earnings, no. Can anybody tell me who the people using retained earnings? Who the people using profit and loss account? Have any idea? Anybody have any idea? One side I have teaching, no. Just we want to interact with you. Why the terms used in the returned earnings in the balance sheet? No idea.
These are carried forward from the
Partnership.
income statement.
The prof, that partnership firm, these partnership firms, sole traders, they are using returned earnings. Profit and loss account will be shown that joint stock companies. Okay. Why they have to retain, we will discuss in that management, financial management. Okay, so here shareholder fund will comes equity, preference, and retained earnings if given, or profit and loss account. Okay, these will be comes under the head of the capital and resource. So why I'm telling, no, this is the method you have to show, you have to present your statement to the management. Okay, so you look at that. Muthu Money and Company Limited furnishes its balance sheet for the year 10 and 11. Requires you to prepare a comparative balance sheet for those years. So you can underline that the above problem will be income statement. Below problem will come balance sheet. The things will be differ. Okay. So here equity 80, nothing will be differ. Debenture 80, 90, fresh issues made. Retained earnings also improving 9,000, and creditors also 20,000 they have increased. Bills payable also 5,000 increase. Okay, and 80, 74, 60, 54. Um, and yeah, 28,000 for furniture, 40, 60, 40, 80 for dip, okay, cash also 20,000 and 8,000. Okay, this is the balance is given. So for comparative income statement or common size statement or trend, very easy, you can secure definitely 8 mark question, or 8 marks or 20 marks. You can pray, you will get it the same. Okay, I look at that second solution. I put the second solution. As usual, you can do it yourself. Okay, see, comparative balance sheet, that is same. Muthu Money and Company Limited comparative balance sheet as on 31st. If 31st is mentioned, otherwise 2010 and 2011, you can put it there. Okay, see, look at that particulars, 10, 11 amount of and percentage. Some textbook itself, increase or decrease in 2011 over 2010. The word they have to mention in the percentage area. You don't follow that. The percentage is enough, but you can put it plus symbol, minus symbol. Why no? Increase or decrease. If you know the sometimes the money will be, sorry, the difference amount will becomes positive, we put a plus symbol. If no negative, you put minus symbol. Okay, yeah, these will be very important in that place of percentage. Okay, see, look at that current assets. See, most probably balance sheet not showing that liquidity positions. The order of permanency and the order of temporary, two things of balance sheets there. If you are showing order of that current assets, you are went into liquidation position. And also current liability are shown that place, no, you are in poor position. So because why I'm telling, no, if you are going to make the investment in many companies, no, if you are ready to invest it, you please go through the balance sheet. If the balance sheet they have shown that equity, share capital and fixed asset, the company are very good. They are permanent in nature. They are showing current assets and the current liability from the starting liability side and asset side, they are in poor position. Okay, this is a some things. Okay, we don't discuss about that investment oriented, right? So assets here, inventory. You look at your question booklet. Inventory, debtors, cash. If stock or inventory, here stock or inventory are both the same. If you want, mention in the bracket. And how much, 40, 60 inventory stock will be closing stock. They have maintained how many percentage? 20 divided 40 into 100, 50 percentage they have maintained for that inventories. Datas, 40, 80, 40 divided 40, 100 percentage, you have raising datas. But the company, they have to receive in meantime, the company will manage. If they are not receiving that particular operating cycle, definitely they have to face that working capital. Okay, why we want study about, you can note it down and mention that. Cash, 20 and 8. So these will be clearly said. Minus 12,000. Negative balance. Plus symbol, minus symbol is not there. You please add it. Okay. So minus 12,000. Minus 12 divided 20 into 100, 60%. Minus 60% you can put it. So why no? Somewhere lag. That datas will be 100% outstanding. They are not collected. No. So if you are going bills payable, sorry, bills receivable is not there. This will also affect that in a cash position. Okay. So you can add it all the current
This is
assets
very good.
40. Yeah. 40, 40, 20, 1 lakh is the total current assets. You please don't subtract it from anyone, any figures. Okay. Very good. Very good. Okay. Yeah. Total current assets, add all the three items for 11, 10 and 11. The difference will be 48 divided 1 lakh, 48 percentage current assets value equal to company having 48 percentage current assets. And fixed asset, land and buildings, plant and machinery and furnitures is there. So definitely all things will be depreciated assets. So difference 6 minus, you put minus value, minus 6 divided 80 into 100 minus 7.5 percentage is the depreciated value, asset value reduced. Plant and machinery also 6 divided 60 into 10 percentage. 10 percentage is the negative value. And the furniture 8,000 is increased plus. So additional thing will be there 40 percentage. Don't plus or minus, you put plus. Plus 8,000 divided 20 into 100. 40 percentage will be for fixed asset increase. So you add all the fixed assets 3, 1 lakh 60,000 and 1 lakh 56,000. The difference will come 4,000. The 2.5 percentage is the fixed assets value reduce. Overall 2.5 percentage is very good. Total assets A plus B. You can write it total assets A plus B. The balance sheet total will come. As usual, 2,60,000, 304. The difference will be 44 divided 2,60,000 into 100. 16.92 percentage is the balance sheet value. And the same will come in the liability because both will be, both the total will be same. No. What one thing you can present your result or you present your your performance depend upon that percentage. So the management will raise the question in anywhere. Why sundry creditors going higher? Why you need not be paid payables? Why you get long term loans? Why you don't retain more money for reinvestment? Why you have declared dividend to the shareholder? See, many things. If the company going loss, definitely the company will pay more dividend to the shareholders because they don't want to transfer from one to another. If the company having a huge profitability, the company retain all the money for reinvestment because you people can know that reinvestment, no, your appreciation is there, capital appreciation. You don't transfer your share to anyone. Okay, so this is the strategy the management they have to use in the business. See, look at that that current that means asset liability sides, current liabilities, sundry creditors, bills payable, 20 divided 50 into 100, 40 percentage. Creditors, we want to pay the 20,000 rupees, and payables also 5 divided 10, 50 percentage we have maintained. Total current liability, nothing will be there. Other things, for example, outstanding expenses or any proposed on the provision for taxation, anything else, you please add it that place. Okay, total liability will be 6085. Sorry, current liability 6085. And next you go for that long term liabilities, 8 percentage debt, 80,000, 90,000, 10,000 fresh you have arranging for loan for 10. 10 divided 8, 12.5 percentage only arranging for additional business funds. Okay. So long term will be take a B. 8 total debt will be 80,000. And again, you go for that what total liability of A and B equal to C. Both add current liability and long-term liability. 1,40,000, 1,75,000. The difference 30 divided 35 divided 1,40. 25% is the long-term and current liability. So the finally, that shareholder fund is important. Shareholder fund, how much they have, whether they are increasing or decreasing. Okay. So 80,000 and 80,000, no fresh issues made. The existing people can continue in the firm. And return earnings, profit, the profit will be 40 and this year will come 9. We have to 9,000 increase divided 40, 22.5% we have that retained earnings. The total shareholder fund will be 1,20,000, 1,20,000, so 9 divided. So plus value plus 7.5 percentage portion having by that room, by the shareholder. So total liability C plus D, you can add it 1,40,000, 1,20,000, 2,60,000. The same will come in the same answer will come. 44,000 divided 2,16,000 to 100, 60 plus 16.92, 16.92. So you don't do anything. No, if you know adding or subtracting whatever it may be, the answer will be varying. If the answer is varying, the total, the answer thing will be varying. So most probably comparative income balance sheet total will come. Balance sheet total will come same in that asset side and balance sheet. If any changes is you think about you did some mistakes. Okay. So comparative income statement is over. Next, you go for that common size. So the management having three different ideas, analyzing their record documentations. One is comparative statement. The comparative statement for what? Comparing previous year, current year. For the same, same year thing will be followed. Sales means sales minus sales. Now, okay, 1 minute, 1 minute. Okay. Next, performance based. See, the another weapon, the taken by the management to analyzing their performance and position. See, they have taken commonly. If you come a common size income statement, the sales will be base taken as a base. The sales will be taken as a base. Sales will be called as an 100 percentage. And you see, the other thing will be compared. The other thing, for example, if purchase for 1 lakh rupees you are going to purchase. If 2 lakh rupees is sales. For 2 lakh rupees is sales 1 lakh. So you have to that comparing it, that means common size means your amount will be commonly based. For example, you spend to 1 lakh rupees purchase divided 2 lakh into 100, you get some percentage. Again, you go for that administration expenses for selling process, selling things, turnover depend upon the sales. You can spend some of money for administration, selling and distribution expense. All the things will be compared only uh, sales. Okay, sales is the base. You can put the 100%. You can, if you can note it down. That common size income statement, vertical format, separate. For step number 1, each and every year separately calculated. Each and every year calculated separately. Note it down. Each and common size statement. You can note it down. Common size statement, or the common size statement or balance sheet. Each and every year separately. Each and every year separately calculated. So in the point number 2, common size income statement, the sales will be taken as 100. The sales, the sales is, the sales is, the sales is taken as 100. No, the charge book. Sales is taken as 100, and sales is based for all other expenses. The sales is based for all other expenses. You have to compare through the sales. If administration expenses divided sales into 100. If distribution expenses, distribution divided sales into 100. So we want to calculate it. See one thing, and third one, vertical format only we want follow. No horizontal. Vertical format means sales minus cost of goods. Okay, and all operating expenses related to sales only for particular year. Please note it down. Particular years. The word important things will be particular year, compare particular year itself, not for previous year and current year. 2010 is the particular year. 2011 is the particular year. You have calculated the same year itself, not for current year and previous year. Okay. So there are 3 steps you are going to calculate it for what common size income statement. Once again, I tell you, number 1, that common size statement, particular year you have to calculate. In the particular year, the sales will income statement, sales will be taken 100. In the balance sheet, the total balance sheet amount, total amount of liability and total amount of asset will be taken as 100. Okay, I forgot it. And one thing, vertical format, you have to compare from the sales to other expenses. Okay, vertical format only I want to calculate it, not for the horizontal. Okay, and sales will be taken as 100%. Okay, this is the method we are going to calculate. That's why I have put that third solution, and we'll go for that problem and come back to the solution. Okay. You look at that problem number 3. The following income statement of Jayaparathi Company Limited for the year 2010 and 11. Prepare a common size statement for the 2 years. So underline that word. This is a question we are going to calculate. So trading and profit and loss account is clearly given that sales. Here cost of goods sold, you get what is that gross profit. So next, in the next page number 2, you have that by gross profit drawdown and by interest on investment. That like non-trading income is there, and operating expenses commonly given, administration expenses, selling and distribution expenses, And also non-trading that are non-operating expense also financial nature, and goodwill also write off for the particular year. Some of the amount is there. Okay. So how do you calculate it? So how do you calculate it? We know the basic things. We know the basic things and basic procedures. So only you go back. Step number one, uh, write that top, that the name of the Jai Bharati and Company Limited common size income statement for the year ended 31st 2010 and also 2011. See particulars, the column will be same 1, 2, 3, 4, 5. But one thing here, you can do it separately. Particular will be common, and 2010 is the particular year, and express your answer will be percentage, and 2011 is the particular year. Okay, and your answer will be expressed in the percentage. See, this is the things. So sales for the 10 4 lakh, you can put it 100 percentage. That is, imagine it yourself, we are decided 100 percentage going to sale. Okay, sales 4 lakh, 100 percentage, and 2011 they have to decided 5 lakh but 100 percentage. How many percentage they are increased, don't think about, because it's not a comparative statement. They are not improving 20 percentage, 30%, 40 percentage. So the unit will be increased, but one things, whatever it may be, the unit going to increase, they have the decided one thing, 100%. They have fixed for the particular year, the targeted sale will be 100. Okay, so sales will be 4 lakh 100 and 5 lakh 100. Okay, separately you can put it. And next, less cost of sales. As usual, that format, we know that trading account, sales minus cost of goods sold, we get gross profit, right? Sales, how much? 4 lakh. Cost of goods sold 2 lakh 40,000, and you go for that 3 lakh 50,000. You please check it. Any error or mistake, you tell me. Okay, 2 lakh 40, 3 lakh 50 is correct, no? So you can reduce it. 4 lakh minus 2 lakh 40, you get. See, one thing, 2 lakh 40 divided 4 lakh into 100, you get it. What is your percentage of cost of goods sold? Once I can tell you, that is what. Don't take difference amount, I think so. Okay, 2 lakh 40 divided 4 lakh. Okay, you don't cleverly do that word. 4 lakh minus 2 lakh 40, no, 1 lakh 60,000. See, it's gross profit. So we want to express our answer in percentage. 2 lakh 40 divided 4 lakh into 160 percentage. 1 lakh 60 divided 4 lakh into 140 percent. See, one thing here, most probably in common size statement, the difference will become answer. No problem. 100 minus 60, 40. But comparative income statement and balance sheet, definitely you don't subtract or add it from the above figures, because the answer will be varying, because we want to compare that water. Horizontal way, not for vertical way. Here, vertical way, definitely our answer will be. If you know, if you suspect, if you not clear idea, you can do it. 2 lakh 40 divided 4 lakh into 100, 60%. 1 lakh, the difference will be 1 lakh 60 divided 4 lakh into 100, 40 percentage. Don't take a 2 lakh 40. Okay, because sales is the base. You can mention in the bracket also. Base means we want a divided from that amount only. Okay. 40 percentage of the gross profit for 10, and 11, 30 percentage. So why the difference will be there? See, The sales volume are going higher, and again, that expenses also going higher. So that means cost of goods sold. For raw material consuming, raw material value. See, due to pandemic period, now the price will be differ. No, depend upon that vegetables or fruits, whatever it may be. Every day the fluctuation is there. So as usual in the business, for comparing 10 and 11, some direct labor cost, other fuels, other expenses also increase. So the trading, gross profit will come down. Why I'm telling, no, if question itself, comment or conclusion, give your conclusion, you can write it your own way. Okay, next one, operating expenses. You can write it same, administration, selling and distribution, same thing will be there. Amount as usual, the particular year amount will be shown that 25, 15, 10, 30, 20, 10 will be for 11. So here 25 divided 4 lakh into 100, 15 divided 4 lakh into 100, 10,000 divided 4 lakh into 100. So once again I tell for 2011, 30,000 divided 5 lakh into 100, 20,000 divided 5 lakh into 100, 10,000 divided 5 lakh into 100. Okay, so you please note it down. Each and every particular year, use it to separately calculated with the help of sales. Okay, so operating profit is how much? 1,10,000. Sorry, operating profit 50,000, and 12% is there, 60,000, 12%. Operating profit, A minus, not operating profit, operating expenses, you can mention that typographical error. Operating expenses will be B. Operating profit A minus B. See, 1,10,000 divided about 4 lakh into 100, 27.50. 90 divided 5 lakh into 18%. Add non-operating income. See, only one thing is there, 20,000 and 50,000. You can add it. The profit, the total profit, how much, non-operating profit, 1,30,000 divided 5 lakh, sorry, 4 lakh, 32.5, and 1,40,000 divided 5 lakh into something, you get it 28%. See, then you go for that non-operating expenses, financial expenses, and the goodwill. You can only 10,000 is the for previous year, and they have write-off means everything they have make them settlement or receive something. So next year nothing goodwill is there. So here 10 divided 4 lakh into 100, 2.5. So 2011 nothing will be there. You put nil. And finance expenses 20,000 divided 5 lakh into 400, you get 4. So total, if here the total will be varying. Gross profit 40%, operating profit 27.5%, and non-operating profit also 32.5%. See, non-operating expenses how much? 7%. And the net profit how much? See, you can add all the things from the below to top. Definitely comes 100 only, not more than that. 40, 27, 40, 32, or 7.5, whatever it may be, right? See, how much, for net profit C minus D, 1 lakh divided 4, 25% for the previous year, and 1,20,000 is the profit for the 11. That divided 5 lakh, 24%. For improvising sales and other thing will be, they have to maintain the same percentage of the profit. Nearly 24%, or little bit there. Some 1% of the profit will be reduced. Why? Have anybody know? Because here non-trading income also we want to show here, but it's not a right profit of the business. It's individual profit. But one thing we want to manipulating our documentations. In this particular area we have own some things, right? So some things, we have paying interest, financial interest, and for example, selling and distribution, all operating expenses, and also cost of sales will be going higher. That's why the profit will be comes down. Okay, so three problems we have to discuss in next class. I think so. 4 o'clock I have class. No, you come 4 o'clock. We will discuss another on-wise balance sheet and a trend. If a trend is there, otherwise I will tell you in orally trend how to calculate it. And the next we will go for that ratio analysis. Okay. Yeah. Thank you. You people can leave and come back in that next hour. If you have any idea, ask me. No issues.
Thanks, sir.
Yeah.
Thank you, sir.
Thank you.
Thank
Thank
you,
you,
sir.
sir.
Yeah.
Thank you,
Thank you
sir.
for
Thank you, sir.
everybody. Thank you. Thank you.
Thank you, sir.
Thank you, sir.
Thank
Thank you,
you.
sir.
Thank you, sir.
Thank you, sir.
Thank
Thank
you.
you, sir.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank you.
Sir, I have a doubt, sir.
Yeah. Tell me, sir.
Sir,
Yeah.
is this
Thank
the
you.
right term for using the word account receivable instead of debitors?
Account receivable.
Instead of debitors.
Account receivable data. Of course, book dates. Like yeah, sometimes they have to use. Some companies they have to use book debts. They have to book debt. Normally they have a debtor and bills receivable. Both thing will be kind of account payables also we can use it. Instead of you can use no issues.
Okay, sir.
Bills receivable or account receivable.
Okay, sir. Thank you.
Or book dates. Book dates is a common factor. Book dates means we want yet to be received in outstanding debtors. Like a debtors and bills receivable called as in book debts. See, in
Okay.
liability side, debts means DEBT debenture. The another word is debenture. Sometimes in the business people, debt means loan. Commonly they have to use loan. Loan means debt. So different terms is there. You don't worry. You can use it. Account receivables is a common things. Okay.
Sir,
Yeah.
hello, sir.
Yeah. Tell me, ma'am.
How to calculate the percentage on a particular year? Can you give any note?
For what?
Hello.
Yeah. Tell me. Tell me.
How to calculate the percentage on a particular year? I can't understand, sir.
Okay. If you know, so after we completing all the portions, the
Okay.
same PPT and the question. If you have that question booklet, we will
Okay.
put it in the Telegram group. Okay. The answer PPT will put in the Telegram group.
Okay.
Why
Thank
we
you.
have to discuss? No, some manual error, something will be there, and how do you
Huh.
calculate that? We will put it. We will send it the answer to you in your group. But we complete all the portion, then only we have to put it in the Telegram group.
Okay.
Okay.
Thank you, sir. Okay.
Oh,
Thank you, sir.
thank you. Yeah, thank you. You people can leave. You go. You take a little bit rest and putting charger.